Hello and welcome. You're watching Closing Trades on ET Now. I am Snehi Shah, and well, here's a roundup of the trading session we've seen so far. Truncated at best, yes, it's an 0.8% cut coming in. At one point of the day, we had inched back or clawed back towards the 24,800 mark, but that is not the case right now, as once again we have slipped below that. Slight nominal recovery from the day's low, but not much happening, nothing exciting rather happening on the index as we speak. Other than that, if you take a look at the sensex, 0.8% cut over there as well. India VIX has cooled off very nominally, but still a 4.5% uptick is what we're seeing around that 12.3 mark for the India VIX. Nifty Bank, as has been the case for most of the previous trading sessions, you have Nifty Bank that's once again underperforming the benchmarks right now. Nifty Bank trading with cuts of about 1.2%. You have Eicher Motors, Maruti Suzuki, so the auto pack is looking decent today, followed by HUL, Nestle, ITC, and once again from autos you have Hero Moto and Tata Consumer from FMCG. So these are your top Nifty 50 gainers at the moment. So you have FMCG and auto that are doing rather okay in today's trading session. What's not doing all that well is a big cut coming in on Nifty Realty, 2.2% cut, followed by Nifty Pharma, PSU banks, metal banks, energy, media, IT. All of these sectors are in the red. But when you're talking about some of the other stocks that are doing pretty okay, and before that, I just want to see what the mid cap and the small cap end of the market are doing, because the cuts here have intensified. 1.4% cut is what we're seeing on the mid cap space, and also the small cap index is actually tanking, because almost a 2% cut, so 1.7% cut to be precise, is what we are seeing on the Nifty small cap space right now. Lots to talk about, because on one side, even though you have the GST rate rationalization push coming in, sentimentally positive, you have the festive season that's just underway with Ganesh Chaturthi tomorrow, and this being a truncated week on account of the market holiday tomorrow, you still have that tariff overhang that's still playing havoc on the market right now. 24,770 thereabouts is where we are at on the Nifty. But we have Deven Chokshi, Managing Director at DR Chokshi FinServ, joining us on the show to share in some thoughts about the kind of trading day we've seen today, and also the outlook in the near to medium term. And Deven, hi, good afternoon. Thanks so much for your time. But Deven, by now, it would have been assumed, one would assume that this entire tariff overhang would largely be priced into the kind of fear that we were expecting to see, because more or less we were expecting this additional 25% rate to play out, the tariff to play out, and that it has in terms of the announcement that we've received. Still, some negativity is what we're seeing in the markets, but it's not a lot as well on the other side. So what do you have to make of the market move today, and do you believe that this kind of cut that we've seen, less than 1% of a cut, is the best that we could be losing on the back of these tariffs in terms of market momentum?
Yeah, good afternoon. Well, as I see it, I think there are two pertinent issues which have applied the brakes as far as I think the market is concerned by the investors in participations as well. The first, of course, I think is the tariff-related challenge that we all are talking about. And the second is domestic-driven mode, which is a good news as well as a little bad news in the near term. The good news is that I think the GST rate coming down is promising to increase the consumption in the second half of the financial year. And the bad news is that I think in the month of August, September now, I think we are likely to see a relative slowdown in offtake because of the possible GST cut, I think, in particularly discretionary products. So I guess I think that market has temporarily applied brakes as far as I think the further buying activity is concerned on various counters, because September ended result could possibly show up relatively weaker performance, which otherwise was not anticipated up till now. I think due to this GST related break, as well as I think some part of the disturbance could come due to the tariff related issues. But as I see it, I think this could be a temporary phenomenon. This could be, I think, an opportunity for those who want to take a position in the market when it goes sideways or it goes downwards in some of the counters.
Okay, so that's the strategy for the near to medium term. But Deven, if you talk about some sectors that are in focus, big cuts are being seen on Nifty Realty today. Pharma is also tanking. But pharma as a sector, while we have this 50% fixed number now for overall tariffs, for pharma, for at least the India export of it, we don't have a fixed number as of yet. Other than the kind of move that we've seen on pharma today, do you believe pharma could be a safe space, at least for the time being, to shelter from this tariff impact?
Well, yes, I think to a greater extent, yes. And particularly those companies which are into generics, but they're in specialty generics or complex generics, I think they would be relatively more safe bet to take. The companies which are into the CDMO business and which are also into the API supply business, I think they could be relatively safe as well. So to a greater extent, yes, I think that would be a good choice to make, at least in some cases. Wouldn't generalize this entire format as far as the pharma sector is concerned, but I believe that I think selective companies could possibly have a better approach, I think, to talk about going forward. One step at a time, not immediately very gung about buying into any of the stock because valuation wise, they're reasonably priced. But should the price cut come in into some of these counters, there could be a buy opportunity.
So that's the take on pharma. Devin, what about your take on autos? And from autos, I mean both the two-wheelers and four-wheelers. Today we have some news flow coming in. Ola Electric is a buzz today. They've received the PLI certification for their Gen 3 scooter portfolio. And on the back of this, they expect profitability boost from Q2 onwards. So that is positive commentary coming in from Ola. Positive news for that stock. That stock doing well. And of course, from the four-wheeler space, you have Maruti Suzuki in focus today, wherein PM Modi has inaugurated their first EV, the e-Vitara. Devin, overall thoughts on the auto space right now? Because even that rare earth mineral issue with China seems to be sorted for now.
Yes, absolutely. I think, and we remain distinctly confident about the auto scoring higher numbers in this current financial year. As I said, that I think 1 month could be a little bit disturbing month because of the GST-related anticipation price reduction. But otherwise, I believe that I think the autos are in for a good shape as far as I think the outlook is concerned. We believe that the electric vehicles certainly would have relatively higher amount of attraction. The demand pull will be significantly higher, and both in two-wheeler as well as in four-wheeler. And at the same time, in ICE business also, particularly hybrids, which Marutis have been very successful with it along with Toyota. I think they are likely to show relatively better performance with a separate categorization of vehicle that they have shown. So yes, auto along with auto ancillary, we remain cautiously optimistic as far as outlook is concerned. Fortunately, the valuation wise, in some of the counters, we are getting an opportunity currently at current levels.
Well, what one can see today hold out definitely is the entire consumption basket. And by consumption, I don't just mean the likes of a Unilever or Britannia, but look at some of the Motan candidates as well. Eicher has been going very strong. It's up good 3.5% in trade. And then Maruti as well, going pretty strong. A good 2.5% is the kind of gain that stock as well is sitting on. In fact, talking about Maruti, they've officially commenced the production of the e-Vitara electric SUV at their plant in Hansalpur in Gujarat. The first electric offering from the brand will not only be sold in India but also exported to various international markets from this particular plant. Shrishti Sharma, my colleague, is here, or rather there at the ground zero as well, and she gives us a detailed report.
Well, this is the e-Vitara that you are seeing right now. We are right here at the Gujarat facility of Maruti Suzuki, where the company has set this particular e-Vitara on the production line. We had Prime Minister Narendra Modi right for this particular event and flagging of this vehicle. As you can see on my back, there are 4 different vehicles of e-Vitara that are showcased, and 2 of them are actually the left-hand drives. For now, the company has plans to export it to 100 different countries, where the major focus will be on Japanese as well as some of the European markets. And the company has also plans to get this particular vehicle on the Indian roads, but that can happen towards the end of this particular fiscal year. In terms of the investments and this particular facility that we are standing, though it has an annual capacity of almost 7.5 lakhs of units, what the company has earlier told us is that almost 10% is rather towards the end of this particular fiscal, 67,000 of units was the target to get produced of this particular vehicle. So yes, exciting times for Maruti Suzuki, and this vehicle is finally launched. And yes, of course, in some months from now, we will get to see this vehicle on Indian roads as well.
भारत जापान पार्टनरशिप की औद्योगिक संभावनाओं को साकार करने की बड़ी पहल यहीं गुजरात से हुई थी। मुझे याद है हमने 20 साल पहले जब वाइब्रेंट गुजरात समिट शुरू की थी तो उसमें जापान एक प्रमुख सहयोगी था। आप विचार कीजिए, एक डेवलपिंग कंट्रीज का एक छोटा सा स्टेट, उसका इन्वेस्टमेंट समिट और जापान जैसा डेवलप कंट्री उसका पार्टनर हो, ये दिखाता है कि भारत और जापान की नींव कितनी मजबूत है।
Well, that's exactly what Prime Minister Modi also had to say about the Maruti e-Vitara launch, on India's relationship with Japan and how it has evolved over the past years. But they went from a market perspective. The first of the offering from Maruti stable when it comes to their e-SUV portfolio, something which Tata Motors and M&M have already captured really well. How do you think the composition and the domination of market share within this e-SUV space is going to pan out? And from an investor's angle, who do you think will stand to be a winner?
Well, I don't think that the competition matters as much as the opportunity is currently. Frankly, I think the early starters like Tata Motors, followed by the Mahindra & Mahindra, and now I think Maruti. I believe that the market is wide open for this kind of players as far as electric vehicles concerned. In fact, the very fact that the growth rate in electric vehicle is maybe more than double compared to the IC vehicle growth rate that we are experiencing currently is suggesting that the business environment remains absolutely very convincing. The challenge would be if Maruti could be a disruptor by way of bringing down the price. The battery cost is not in control of most of the players, and that's the reason for which their vehicles are slightly expensive. But in my viewpoint, going forward, if the battery cost comes down, in my viewpoint, the electric vehicle offtake would be significantly higher. And that's what I would like to probably imagine. Going forward, we are going to see this kind of traction as far as the cost coming down for the battery. And electric vehicle is the way to go. Mahindra is definitely, scored above everybody with the non-electric vehicle that they have brought in. Today, Tata Motors and Maruti, both of them are bringing the electric vehicle on the ICE platform. In my viewpoint, if they end up bringing up the non-electric vehicle platform, it could be, a different game altogether. Let's wait and see. But the prospects remain really very convincing at current levels.
Okay, we'll wait and watch and see which of the two major e-SUV players actually takes the lead when it comes to this segment. But let's just focus on while we are talking about the festive season and the consumption boost. Let's talk about quick commerce players. They're gearing up with festive discounts, deeper assortments, and companies are expecting a big surge in demand this time around too. My colleague Anjali is here with all the key expectations and how they're gearing up for this festive season. Anjali.
Right, so the festive season is a key period of business for quick commerce companies, and as they've experienced in the past few years, the festive season is the one that brings them a lot of business. So as per expectations, they are expecting a big jump in demand during these days and to maintain delivery speeds as well as to make sure that customers receive exactly the kind of things that they want. They're going with deeper assortments, addition of new categories, and also discounts is something that will be in focus now that we have a couple of more quick commerce players that are in the market vying for the same set of consumers. So if we talk about category expansion, first of all, we are seeing expansion happening in festive SKUs like jewelry, ethnic wear, something that we had not seen much of last year, will be in focus. There is gift cards as well as gold and silver coins. Other than that, gifting is one key sector that different quick commerce companies are focusing on, of course, across budgets, and also fasting essentials, something that is coming from Instamart. If you look at BB now, they are deepening into non-core festive categories, which means not just the essentials, but also other things like home decor, gifting, cleaning is something that they are focusing on. It is also important for quick commerce companies to make sure that they have enough inventory, and for that Instamart, for example, is stocking up early, and they're also scaling staff as well as delivery partners. And also Zepto is going to be providing some hyperlocal incentives to boost the delivery partner participation, something that they might see a shortage of in key festive days. For example, Big Basket now is also saying that 90% of their customers will get access to all 25,000 of their SKUs by October, and currently only 65 to 70% of their customers enjoy that kind of inventory. Talking about discounts, on Rakhi and Janmashtami, we saw around 60 to 70% discounts on key festive SKUs across quick commerce platforms, and so there is an expectation of the continuation of such discounts. Big Basket now says that their discounts will be tailored to festival baskets, and there is no broad-based discounting from them as such. But Instamart says that Diwali is the one period that will feature the season's best offers on the platform, and also assortment and delivery timing is something that is of more importance to Big Basket now here. There is also an inclusion of a lot of local favorites this time, which means that Instamart, for example, has launched hyperlocal festive favorites as well as mithais to make sure that every particular customer cohort enjoys the kind of assortment that they wish to have. Along with this, there is a jump in the number of brand onboardings also, as more and more D2C brands also look to be listed on quick commerce platforms to reach their customers earlier, because of which we are also seeing a crunch in ad space, and brands are reporting increased competition on quick commerce platforms, and because of this the ad costs are really inching up for the new as well as older brands listed on quick commerce platforms. Keyword based advertising costs have risen as much as 3 times according to a few brands that we spoke to, and in comparison on Meta and Google, traditionally around this time, festive time, ad costs inch up by 10 to 30% only, which means we're seeing a lot of interest from brands as well as customers to shop on quick commerce as the festive season approaches closer.
Oh, yeah, absolutely. It's that time of the year, isn't it? But Devin, just wanted to get your understanding, because, festivities are the time when you do see heightened activity and promotional activity at that from most of these QCom and ECom players as well. Who do you think is going to win the race? So far, it has been Eternal all the way. It's only a duopoly that we have within the listed space. But do you think Swiggy can also catch up? Because that's where you still have valuation comfort.
The one who is going to make less amount of losses is going to be the winner. That is very clear. I think these guys are in the process of delivering the products, I think, in a quick commerce manner, whatever we call it as. I think they are still burning a lot of cash. And I think would eagerly await for Reliance's strategy to basically succeed in this kind of environment, because they have integrated themselves with the Kirana marts in their own stores in such a manner that they probably, I think, do not have the same legacy issue which I think most of the other quick commerce players are having in the e-commerce side of creating large stores, etc., because they have got the supply chain logistic in place. So to a greater extent, I think they're relatively better off. The last mile connectivity is also expected to be better, because I think that the connectivity with the Kirana merchants and the local stores is extremely high. So in my viewpoint, I think both the Blinkit as well as Instamart or Swiggy, I think we will face probably the real test once I think JioMart enters into commerce in a decisive manner. They already entered into it, but in a decisive manner they penetrate. I think that will be the real time of taste, I think, that we'll get as far as I think the profits are concerned for these players in the market.
So just like that e-SUV category, even quick commerce is going to be up and buzzing, and all eyes are going to be on who actually takes the baton ahead from there. But Devin, thanks so much for your time and appreciate you joining us today.
Thank you so much.
All right, let's move on. And that tariff deadline is now less than 24 hours away for us. To be very precise, it's going to start kicking in at 9:31 a.m. tomorrow for us. We have Arvind Chari, the Chief Investment Strategist at Q India UK, joining us to help us decode this entire tariff situation that we're seeing. And Arvind, Hi, thanks for your time today. Good afternoon to you. First up, give us your take on this 50% tariff with this now 25% additional tariff now being imposed on India. To some extent, I believe some part of the market was believing that, a taco trade may play out here, but now we do have the certainty that this is actually for real and finally happening. What are your thoughts on that?
Always good to you, Aisha. Good to see you again after a long time. So I think it's almost surprising where we have reached as a situation. Back in July, I think the Indian trade negotiating team was very confident that India will walk away with a 15% tariff, which would have put India in a very good stead as compared to other countries with tariffs which are higher than that. So from there to a situation where we are seeing a 50% tariff on almost all exports. Of course, there are some exclusions, electronics, pharmaceuticals. I think I saw a bit of auto components and also iron and steel. So there is some exclusions, but we are in a tough situation. So of course, a lot of people will say that the impact on GDP is less currently, and that is true because the overall exports to the US, if you exclude these sectors, is not very large, and its impact on GDP share will be limited. But I've written about it before that this is not the way to look at it, because if India would have walked away with a 15% tariff rate, look at the opportunities that it would have created for India in terms of being able to access in a relatively cheaper way a large share of the global market. And that is important because if you look at the last 10 years, the nominal goods exports in dollar terms is about 4%. So we've really not done much in the export side. We know we have missed out on the global value chain, but even in existing traditional sectors where India had some amount of benefit or market access in the goods segment, we seem to have lost that in the last 5, 7, 8 years. So it was important that we do a good bilateral trade deal with the US and with other large developed nations so that our export share of goods increases and our manufacturing exports increases. So that has not happened. Maybe we'll see a better deal with the EU coming soon, given that we have had an impact. And we are seeing some overtures that India is making towards China, and that is also always welcome. But the impact would be larger than what we anticipate. Take anything about input-output ratios of all industries. It tends to be about 70%, right? So it's not only the export sector with the export of goods which are getting imported. Inputs to those exports will also get impacted. So from a near-term basis, there is some impact. But when you look at the opportunity in terms of what we could have managed and delivered, I think it's a big setback.
Sure. But Arvind, there are two ways of looking at it. Of course, one is hoping that a taco trade will play out here as well. But is it more that the market is willing to wait it out for a month, 2 months? Is it more a time-wise wait-and-watch approach? Or is it more in the hope of that 50% becomes 25, nil or 10%? Or, it's the quantum that will make markets happy. Tactically, what do you think really are the assumptions right now?
It's very difficult to make the assumptions given how volatile Trump's behavior has been. But that also gives you the opportunity with Trump. Either it is a taco trade or it is the fact that you can actually enter into a negotiation with him, and there must be some give and take, right? So it all depends on whether the relationship that has unfolded in the last 2 months, is it because of ego or is it because of actually the India-Russia trade? And in that, India actually had a positive. India is a net importer of oil. And we could have seen a situation where you're entering into a trade negotiation. You have the Achilles heel of being very large importers of oil. And 50% of the imports of oil from Russia is by the private sector. It's not by the domestic oil companies. It's not entirely benefiting the country in terms of imports and refining. Although the private sector does add to windfall taxes and they also add to GDP in terms of producing those products and exporting. But you could have seen a situation where we could have weaned away from Russia and moved some of our imports from US. So there are all these give and takes. We still have some of those cards. Of course, we are not China. We cannot ban rare earths. We don't have a material like that which we can ban and which will hurt US. Or we don't have a large size from the corporate sector or for the government that we can offer to the US for a trade negotiation. So we'll have to see how that trade negotiation goes. But it is possible. if you look at the history of India and US relations since the 90s, it's been a relationship where it has, at least in the State Department, the overture towards India has been a lot more positive. In fact, the Biden-Modi summit last year, and the readout out of that was like a 58 paragraph, very comprehensive net economic cooperation between the India and the US. So there is hope, but till the time that happens, and India is at 50% relative to everybody else at 15, 20, 25%, it is going to be a setback. The way the markets are reacting as it's basically for the current situation that the immediate impact on the economy is not that high. The listed market impact of that total goods exports also limited given the sectors that are in the indices and reflected in the markets. So that's why you don't see much activity there. You're seeing some sell-off in the currency. So the rupee has been depreciating and it is underperforming against emerging markets. And we've also seen that in the bond yields. So the biggest impact has been on the bond yields. Of course, it is not only a factor of the impact from trade deficit or impact from the currency. It has some monetary policy implications as well. But broadly, I think the impact is still muted because what you said, there is expectation that we might swing out of trade and get into the better side of the US relations. And the impact as of now is limited from a macro perspective.
Right, okay, so that's the word coming in. Arvind, while I agree when you say, we don't have the kind of leverage that China does in terms of rare earth, earlier the picture was very rosy with China and US, and just this morning, Trump has threatened to impose a 200% tariff if those rare earth magnets are not exported to US. While we don't have that, what we have going for us is generics pharma, something that the US needs from us. And while we don't have any specification on the pharma number right now, do you think that could act as a turning point in India-US negotiations? Because generics is something that the US really needs from India.
It is, and it is one of those sectors where India has, like auto components and generic pharma is something that India has exported up in the goods side. But I mean, can that be a threat that we will stop supplying the medicines that you need if you have a retaliation? Like India has, as of now, apart from any direct communication between the two leaders, India has not retaliated yet. So we're still waiting for a rapprochement because that is a better way to play the US relationships, right? Like that is a large market. We will be able to gain and increase our production and market share over a period of time. And do not forget that they are also pretty large investors. I'm not saying there is an impact on sentiment, but there is always a decision to be made, right? So India gets reasonably good FDI investments from US and US corporations and playing the entire value chain. India also gets significant amount of portfolio flows, right? So if you look at the Fed data, about $350 billion of US resident money is invested in India. And that is a very small share, as I've written very regularly, that the global world is invested less than 1% of their assets is invested in India. So India, there is a lot of scope. So it is in our interest to have a better outcome, not only on the trade side, but also on the investment side and on the sentiment side. And that's why I think rightly so, India has not retaliated. India has made some statements. India has put up its point, but India has not retaliated in any form or manner. And maybe the hope is that we will actually end up having some negotiations, and maybe if that happens to be cutting down Russian oil, so be it. I mean, it is in the benefit of the overall economy.
Right, interesting. Okay, that's the take coming in on what the market construct right now is looking at. Today, of course, you've had that bit of a knee-jerk reaction play out. Lots really going on. It's a truncated week. It's a big one at that, not just the tariff implementation come tomorrow morning, but you've got the MSCI rejig as well, which is in place. And then Thursday, of course, you've got the expiry too. But over a 200-point dip is what you're seeing on the index alone right now. And more importantly, the shape of the market breadth as well is looking quite bleak. You've got a count of 179 stocks standing to the declines, which is 42 odd standing to the advances within the F&O pool. Sectors like telecom, realty, financials, banks, infra, chemicals, etc. are the ones which are weighing acutely heavy on the markets right now. But actually, what strategy would you propose right now for the Nifty Bank? And what kind of correlation and bearing is it having with the Nifty nowadays?
Good afternoon. So yes, clearly the bank Nifty is an underperformer here. If you look at the last few trading sessions, it's been the banking pack which has been dragging down the indices. And if you look at the technical price patterns today, we have a fresh breakdown of an important 55,000 support zone. So this breach of support is the reason why you are having some intense intraday selling pressure in the banking and the financial services pack. And in all likelihood, the next level of support one can look forward to in Bank Nifty is around the 200-day exponential moving average of around 53,500 to 53,800 zone. We will be dealing, it's a truncated week and the monthly expiry is on Thursday. So really how to play out a day, that's tomorrow's session is the question mark on many traders' mind. But my understanding is mostly we should be setting us for a gap down open, and 53,800 possibly is the downside one can look forward to in the very short span of time.
Arvind, if I could just, get back to you and, just one wonders whether the reform push by the government, both GST rationalization, the push from the RBI in terms of rate easing cycle and all the effects which are yet to trickle in through the system, do you think that can really compensate for the tariff hit? Should something not really come about on table soon in terms of, negotiation or an outcome of that for that matter?
I think it is important, right? If I look at trend GDP growth, we are still growing at about 6.5%. And if I look at income and consumption growth, that has been growing at a much lower pace. And that's why when you see the GST rate cuts, it was overdue. I mean, the GST rate cuts were growing at the GST tax revenues were growing at a faster rate than income growth, suggesting that the consumer surplus is reducing. So a GST rate cut is important. Generally, India reforms when we see a impact or a shock. We've seen in 1991, 1998, 2003, 2013. We tend to make reforms when we are pushed back to the wall. And it will be good to see what all the government comes out with, apart from the GST tax cut is technically not a reform. It is a rationalization that was due, and it is extremely welcome to see. We saw the RBI governor mentioning that certain sectors which got impacted, which will get impacted by the trade tariff, will be supported, and that's likely that should be done because India actually made a reasonably good amount of windfall taxes when we imported the Russian crude oil, right? So some of that have, of course, already been spent on the fiscal accounts, but the government can think of giving specific targets, sectoral targets, incentives for certain sectors, certain companies. And in general, what is lacking is we still haven't seen the private capex story pick up, and we know for many years that the balance sheets, banks and corporate balance sheets have been pretty good. There is capacity to invest. Capacity utilization is still running reasonably at a level, and what is missing is the demand and the income push. And as we see some more demand push, and as the economy steadies a bit more, you might see some more activity. If some reforms are pushed, we will be able to push that a bit more. But if I look at from a foreign investment perspective, even if you look at FDI, and of course there is a different story on the gross and the net, but on a very sustained basis, fresh FDI it went from about $30 billion to about $45 billion. So it hasn't increased a lot in the last 5-10 years. So we will need to see why we are not getting fresh FDI investments. We are seeing something similar in the portfolio flows, but that has an impact on the market where fresh portfolio flows on a net basis have been kind of zero in the last 3.5 years. So that can be an aspect of valuations and relative valuations of India against emerging markets. But on a FDI basis, foreign investments into Indian manufacturing and doing Indian value chain, or domestic private corporates increasing their private capacity utilization. And I think the sense is it is a function of demand and income growth. And as that picks up, we have to see what the government does. Otherwise, the economy is still growing at about 6.5%. If the manufacturing exports gets impacted in a very significant manner, including in generics, pharma, and auto and electronics, which has been kept away for now, then the impact will be a lot higher. But let's see what all the reforms. There are quite a bit. We don't need big bang reforms. There are a lot of very small bottleneck reforms across sectors in taxation and investment that can be done by the government, including in some aspects of labor and agriculture, which will give the boost. So we'll see what comes out.
Absolutely. Lots of wait and watch, isn't it? But Arvind, great to have you on the show today. Thanks for your time.
Thanks, Aisha. Thanks, Neil.
Okay, let's welcome on board Shivangi Sarda as well and find out how she's maneuvering the trade this far. Shivangi, hi, good afternoon. We've breached that 24,800 mark and 25K was clearly short-lived. What's the strategy next to trade Nifty?
Very good afternoon. Thank you for having me. So we've seen that, of course, the markets have been in pressure from the last 3 trading sessions. And of course, there has been call writers which have increased their position, which is making the upside more capped and limited. And today, of course, global news have impacted us and we've sunk lower. From the initial hour itself, we were not being able to sustain at the higher zones and we were slipping by. Right now, as well, we've breached 24,750 marks, which was an important support level. So, it's opening a little downside towards 24,500. So it should, kind of stabilize over there. But clearly, 25,000 is the next psychological barrier that we are, making for the Nifty index. So some sort of pressure will be expected. But of course, we're heading into the monthly expiry next session. So a lot of volatility and action will be expected and seen over here. Of course, talking about Bank Nifty, this index has underperformed from the last few weeks, and the underperformance can be clearly seen from the last 4 trading sessions where we've, also breached an important level of 55,000, which it was barely sustaining, from the last 4 weeks. But now we've managed to break that as well. Now, thanks to, of course, the lack of momentum in the heavyweights as well, which has given up strength for the banking index. So downside, we're looking at the next level of 53,750 for the banking index with resistance at 55,000 levels, which would be an immediate level to watch out for. And of course, being the monthly expiry, a lot of momentum will be seen over here in the banking index as well.
Okay, so that's the trade setup for Nifty and Nifty Bank. Of course, Nifty looking a little weak. We've once again slipped below that 24,750 mark that Shivangi was talking about, which is an important support level. So let's see what Thursday's trading session, which is the monthly expiry, holds for us. But on that note, we'll step into a very short break, and on the other side, we'll interact with Varun Sabu of Anand Rathi Shares and Stock Brokers. So you stay tuned and we'll be right back. Welcome back to Closing Trades. Let's get you an exclusive sneak peek into what's happening in the PMO right now, because in an ET Now exclusive, sources tell your channel that the Prime Minister's office is meeting with officials from the Commerce Ministry and the Ministry of External Affairs. Senior officials from the CBIC will also be present in the meeting, and Prakash is here with all of those exclusive details. Prakash.
Yes, an important development coming in as we are learning from our sources that the Prime Minister office will discuss the impact of US tariff with officials today. In fact, PMO will review preparations to mitigate the impact of the additional 25% tariff being imposed by the US, which is in the form of a penalty, and that will take the overall levy to 50%. In fact, the concerned US Department has already come out with the notification, and new tariffs will come into effect from tomorrow. Sources are indicating that the officials from Ministry of External Affairs, Ministry of Commerce will attend the meeting. Along with that, senior officials from CBIC will also participate. In fact, government will assess the impact and the strategies to mitigate the additional burden. In fact, we'll discuss various measures and options to support exporters at this point of time. Along with that, sources are also indicating that the government is committed to protect the interest of vulnerable sectors, of farming, agriculture, along with the MSMEs and entrepreneurs. In fact, all possible steps are being taken to protect industry at this point of time. You are aware that the US government has imposed additional 25% tariff on India due to purchase of Russian oil. But the government has made it very clear, as sources are indicating, that every possible steps will be taken to protect India's energy security, and will continue to purchase oil from wherever it is available at affordable prices.
Right, okay, that's what's happening at PMO, given the deadline of the tariff implementation now for total of 50% is less than 24 hours away. Just looking at the market construct, and we're definitely closing in at the session lows right now. You've got that MSCI rejig as well, which is currently under play. And I guess those stocks also would be seeing those proposed inflows as well as outflows. In fact, let me take it across to Sharad and get in the details of the rejig.
The MSCI adjustment will happen today, and the last 1 hour of trade will be volatile for a lot of counters. Now, India is expected to have a net outflow of roughly $250 to $270 million. And let's look at the key inclusions, which should be very much important, especially in the last 1 hour of trade today. The inclusions include Swiggy, Vishal Mega Mart, Hitachi Energies, and Vari Energies, where inflows in range between $230 to $293 million. Looking at the exclusions, Sona, BLW and Thermax make it to the list, where the expected flows go between $117 to $165 million. And we'll also weight up is for CG Power, where you're expecting a $56 million of inflows, but weight down, that is where the majority of outselling is expected to happen, especially in the counter for Eternal, with almost $571 million of outflows expected. Also, Asian Paints, JSPL, Havells, they also range between 40 to 102 odd million dollars. Small cap index, the key inclusions include Sona, BLW, Thermax, and exclusions include Bharat Dynamics, and two other names also come, Nexus Select Trust and Inventurous Knowledge, to the list. Now, this entire setup, the inclusions and the exclusions and the flows have been sourced from Nuvama Alternate Equities.
Thanks for taking us through that. So, well, yes, right about now, we should start seeing the impact of this rejig taking place, and some of those stocks that Sharad spoke about are already seeing some movement. But we have Varun Sabu, Head of Equities at Anand Rathi Shares and Stockbrokers, joining us. Varun, hi, afternoon, and thanks for your time. You know, well, of course, this MSCI rejig is one event that we're watching out for. The bigger event at play, of course, is the tariffs right now. Help us understand, how are you approaching this entire tariff overhang? Any restructuring that you've done to the portfolio? Any stances you've changed or positions you've reduced?
Hi, thanks, Irina, for inviting us on your show again. So obviously we know about this tariff and this noise going around for a while. I think still this is noise. Obviously, that's my opinion and our house's opinion. Things cannot go through the way they're going through right now. There's too much noise floating around, not only for us, but for all economies in the world, right? Anything which happens, President Trump gets up and calls it that he's going to tariff that country by, say, X number. And these things are keep going on happening. The good part is that our country has handled it very well. India has been handling the entire situation very carefully and very properly. They have not been making unnecessary statements. In fact, if anything, this is leading into much, much better scenarios where most of the other countries where the tariffs are coming, we are again hearing BRICS coming back together, Brazil, Russia, India, China, South Africa, everyone coming together. And, we are hearing about ties to improve there. And that's the most important part, because once this part opens up, you are not reliant, dependent on any one country. As such, also, India from an exports perspective is not much. We are very, very small in the frame. To US also, if everything goes the way it is, the maximum impact, as per our house's view, is not going to be more than 70, 80 bips or a percent to the GDP. But there is much more that you can capture from other countries. One has to remember, we had the UK FTA, which just happened about a month and a half back. That really helps. Things would get diverted there. There are other countries which are looking to do much more ties with us. The entire Europe is willing to open up with us. Our relationship with China is improving. The good part with all this mess is that we are now again getting back stuffs which were stuck like rare earth, etc., which was stuck from the China side. So things are improving. See, there are many, many positive things also which are happening. Most importantly, the biggest positive which is coming out is how we are hearing about so many things coming out from the government's kitty, right? We heard about this entire GST move, which our respected PM came and spoke about. We are also hearing statements which are coming out that there are going to be many more things that they're going to do from an economic perspective, which is going to help the country. I mean, if you are in a situation where the government is looking so proactive in doing things, and they are clearly making it a statement that, okay, we are enough to counter the entire thing from our own consumption, own manufacturing, etc. there's no reason to look back. I think this is the best time, this correction which is happening, led by whatever FII flows is domestic flows have been super strong and they continue to remain strong. We saw 43,000 crores net mutual fund inflows, which we saw last month, right? I don't see a reason why that will change again this month. So very, very hopeful, very positive on the markets. I think at 18 times 1 year forward or 16 and a half times 2 year forward, our markets are super attractive.
Coming in on the overall market setup right now. By the way, we're about to even breach that 24,700 mark right now. We're clearly at the session lows. 264 points lower is where we're currently at. And now we've already slipped below that mark. Officially, 24,700 got taken in. Right now, Shivangi, let's just revisit your trade on the Nifty. Shivangi, you're on mute.
Yes, Aisha, thank you. So we've established the fact that, of course, Nifty, the weakness is going to pertain over here. And we're looking at 24,500 as the next mark on the downside for this index. Of course, the resistances are shifting lower, and we're looking at 24,850 as the next resistance level.
Okay, that's the take coming in on the Nifty. But let's just mark some of the key pressure points. And I'll get Akshay in as well to comment in on that. Because sectorally, telecom, yes, because, you've got Vodafone, which has really tanked today. It's down about almost 9.5%. But other than that, it's a heavyweight-led selling that one has seen. And banks clearly are the focal point here. Look at an Axis, HDFC Bank, ICICI Bank, Kotak, SBI. I can't spot any winners there. Or for that matter, select pharma names too. Sun Pharma around 3.5%. There's, of course, some of the metal names like Tata Steel as well in there. And then NBFCs too. Bajaj Finance has slid about 2.25%. There's a Geo Financials, there's Trent, Reliance Industries. So quite a few segments of the market are also under pressure. Akshay, other than banks, where is it that you see weakness in the market right now, sectorally or, any specific stock cluster?
Yeah, so besides banks, if I were to kind of name some sectors where there might be some extended short-term profit booking, or I may say just for expiry-related profit booking, you can look at the metals pack. I think there is some weakness which we have seen in Tata Steel today. A range which was building the resistance of 160 has held pretty strong and resilient. And again, we are noting a fall from the resistance zone, which can again drag down the stock to levels of 155. Even if you look at some other metal names like Jindal Steel and Power, which was trying to attempt a strong breakout above 1020 level, that breakout has failed from a short-term perspective, and that means that on a failure of breakout, again, the lower end of supports around 930 or 940 might get revisited. Similar is the case with a JSW Steel from the metals pack, where a breakout of 1070 has failed, and mostly the failure of breakout means a downside till 1020. So metals seem to be more vulnerable to profit booking from a short-term price volume scenario. A couple of breakouts in the heavyweights have failed, and that means some pain might be in the offing for the short term in the metal space.
Okay, so that's the take on some of the metal counters, and that's something that Akshay is flagging off for us right now. Just want to pull up the Nifty once again. Yes, below the 24,700 mark is where we are at, around that mark right now. Varun, we were talking about the IT sector yesterday. That was the top gainer yesterday, and today, other than TCS, nothing else is actually looking good from the IT space. Do you think now is a time for a sectoral turnaround over here, given the underperformance we've already seen, or are you still waiting and watching when it comes to the IT space?
It's a time where IT space will turn around. One has to keep in mind that generic IT has gone through these phases in the past as well. Currently, the downturn which we saw is led by the fear of OpenAI, which has been most spoken about across. This was the same thing which happened during the Y2K time. Then we saw the same thing happening during the cloud time. When cloud had come, people were talking all the world of things that these companies are coming to an end, etc. And again, in OpenAI, in the world of OpenAI, we are again hearing the same noise. See, I can understand that at times They are a little behind the curve in terms of catching on to any newer stuff which is coming up. But every time historically they've proven that they gain that particular competency and they move ahead of everyone else. I don't see a reason why we will be behind. Every company in all their quarterly calls have been talking about the kind of spends, the kind of focus, the kind of build up they're seeing on the OpenAI side, on the AI side. And I don't see a reason why that's going to change. I hear a lot of things positive from the IT companies. This being a big opportunity, they are already seeing deal wins on the front of AI related deals, etc., which are coming in. So this is the best time when you're getting, say, Infosys, TCS, Wipro, etc., at below their 10-year average multiple. In fact, way below their 10-year average multiple, right? Let's not talk about the 5-year average multiple. These stocks will look so cheap that everyone will start buying right away. But I think that they're extremely attractive at the valuation they are. They're great businesses. They throw immense cash flow. I mean, you can't get anything better at 17, 18, 19 times. So it's a must buy.
Okay, and that's quite the tactical call right now, which I must admit the street seems to be still very much divided on, but Varun is convinced. Varun, great to have you on the show. Shivangi, Akshay, we let you guys go as well. On that note, just counting down for the market close. And definitely it's been a little rough for us. And I mean, to think of it, that when we started off trade, we were only mildly soft, and then it's been a very gradual grind down that one has seen. Thursday, of course, is the monthly expiry as well, but today we've even reached and dipped below the 24,700 mark. Maybe on adjustment we make it back to that level, because that breach only happened towards the dying minutes of trade. But even the broader end of the market, and I think that's where you've seen the bigger pain points today. Look at the breadth of the market. That's really been a yawning gap in favor of the declines. So be it the telecom names, some of the technology names, some of the capital market plays, or for that matter, even some of the white goods stocks, they're seeing some acute profit taking. Look at a PG Electroplast, for instance. 6% of a crack is what the stock has seen. Of course, it looks a little meaningless given how much the run-up in the stock has been pretty much on a daily basis ever since there was that whiff of GST rationalization. But look at an idea today. No DOT support on AGR dues. 9.5% is the crack on that stock. Angel One has slid 4.5% in trade. There's been a K-Fintech also, which has slid about almost 5% or so in trade. And then, yes, it's been, some of the large cap banks and financials. Bajaj Finance goes home with a 2.25% loss. IndusInd Bank lost 2.5%. Axis was down. Kotak, ICICI Bank, HDFC Bank have all been painted red. Select pharma names like a Sun Pharma, reacting to one of the brokerage calls as well, has seen a fair amount of slip up in today's trading session. And then, of course, they've been the likes of BEL, Trent, HCL Technologies, etc., Titan, L&T, which have also felt the heat in today's trade. On the gaining side, though, select consumption names, Unilever, Nestle, ITC, Britannia, the typical defensive plays are the ones which managed to show some resilience. But yes, select autos too. iShares goes home with a 3.5% gain. Hero MotoCorp managed to gain ground by 0.7%. And Maruti also was one of the star performers today with a 2.5% of an uptick. But Snehi, what about the newsmakers?
Well, yes, Ola Electric, one of the newsmakers, and one of the pockets where we're seeing a lot of green on the back of that PLI that they have won, and that is also expected to boost profitability after Q2. That's the word coming in. So Ola Electric looking good, up 4.5%. Some other stocks have also done quite well, but I believe we're running out of time in terms of the market close right now. But yes, the select names like Vari Energies, Britannia, Ipca, Eclerx, iShares, HUL, Devyani, Maruti, some of the top gainers from the Nifty 500 group of stocks. But on that note, we'll wind it down on this edition of Closing Trades. It's a goodbye and happy Ganesh Chaturthi from Ayesha, me, and everybody here at ET Now. Enjoy the holiday tomorrow.